Good morning, everybody. This is Live Trading Talk with Patrick MontesDeOca here. Live trading right now, we're basically are looking to buy the gold market. We've added one contract here, and we're going to be adding another contract here. So we're buying the gold at the market right at the opening here. We're going to be concentrating on trading the VCPMI today. We're long 2 gold at 1765.30. And you can use, first of all, a few choices of stops. The most conservative stop would be a close below 1765 at the end of this 15-minute bar. You do not use straight stops. You can use the daily 1762 as well as a protective stop on a close below. What we're looking here is that the price is in a very, very strong area of accumulation of supply. And we have entered not only the daily levels, you might say, between 1773, 1762, but we have activated a weekly buy one level of 1765. Now, what I want to point out to you, again, especially for those viewers that are joining me that do not understand the structure, you might say, of the algorithm here. When the price is in blue, you're looking at a very high probability that the price is going to attract buyers. It's at the extreme below the mean. And using standard deviation, basically, you're looking at a probability on the weekly signal if the price reverts from here. About a 90% mathematical probability of a reversion unfolding. And it activates the target of 1809 on the weekly signal. The stop is the same. The logic is the same. So you can use conservatively a close below 1765 conservative stop, or you can use the daily 1762, or you can use a hard dollar stop that I qualify as a catastrophe stop. And that is a dollar amount that's comfortable for you as a trader, as a self-directed trader. What I risk on a trade may be a lot of risk for somebody else. So you got to measure that based on your own profile. We're building equity here. We're up 1768. So the immediate target next is 1773, where you can use to take some profits off the table. I'm going to give myself a little room And I'm going to put a limit above at about 1772.50, roughly just below the target to take some profits. I usually carry about a $300 target on the first contract, and I'm allowing this a little more here today because of the volatility, and we are extremely oversold on the metals. We have a signal on silver. We are long on the silver as well. It activated a buy trigger on a weekly basis from 22.38. Initially, you can trail. If you get a profitable position, you can put your stop at your entry point, which is the beginning of a trailing stop if we're getting a reversion to unfold, which is what I believe we're getting. To stick to my discipline of the first $300 here, we're going to take a profit on the first contract, and we made $350 on the first contract. We have one contract open, and we have a limit to sell at 1772.50 to take profits on the balance. As you can see, I know exactly what to expect if the price does activate or negate the intelligence, the artificial intelligence that it's provided by the algorithm. And what I'm doing right now is reverse engineering the logic that is written in C++, easy language. It's coded in C++ in TradeStation. And I use it myself as a self-directed trader in conjunction with basically the algorithm, so that I can eliminate any emotional decision-making factor, you might say, that may deviate from the math of the market. Basically, the market itself is a mathematical matrix. It seems that we got some economic news that came out this morning regarding jobless claims. They were down, I believe, by 20,000, less than expected. And so it shows that the economy obviously is moving in the right direction. But we've gotten this Omicron variant risk in the market once again, and we've seen a lot of panic selling here the last couple of days, and obviously it's brought the market down into these extreme levels that we see here in precious metals, as we are concentrating in precious metals and digital assets in trading our own accounts. And I am also teaching and coaching live in a trading room at the Equity Management Academy for the rest of the day. I'm doing a half hour, the first 30 minutes live, basically to show you how we monitor the program for the rest of the day. And we do that throughout the day in the Discord live trading room. We are fluctuating in the area that is identified as the area of accumulation of supply. And we are holding a long position here in silver and in gold as a day trade. Our entry point is 1765.20. We've locked in already about $300, $350, and we are up about $630 for the day for the trade. Our target is 1773. We have an order to sell at about 1772.50 on a limit order and take the balance of the profits out. So this is a very defined structure that basically, as you can see, the VCPMI provides you self-directed trader, like a GPS for your trading. There's no guessing. I'm not discussing fundamentals at this point. I'm simply showing you how the market trades regardless of the fundamentals. The fundamentals might be the reason why this market broke from early this morning, from about 1782. And it has broken into this area that potentially is making what I believe is the final annual lows in gold for 2021. As we move into this area that you can see, we're looking at not only the VCPMI identifying the harmonic relationship between the daily and the weekly signals, but we have a cycle low expected. As you can see, the 30-year cycle fits right into the price low today, into the code accumulation of supply level. And if you add the Bollinger Bands and so on, it's right into a buying level with a high probability mathematically of a reversion unfolding from here back up to that 1784. And the weekly target now of 1809. Let's take a look at Bitcoin. Bitcoin is activating buy triggers from the 56,185 level, which is the level in blue that identifies, again, accumulation of supply. This is where the algorithm tells you that it is a high probability to buy into this area. As you can see here, major reversion unfolded, and the market actually is holding nicely the gains that it made in the last couple of days. The average price daily is 57,825, and the market is in a buy mode from the weekly signal with a target of 60,500 for the rest of the week. Omicron has basically thrown a fear factor in the market. And in my opinion, I believe it's overdone to the upside. It's overdone. And so the markets are discounting basically this news, and I think we're going to see a lot of volatility as the virus unfolds, basically, and develops more in terms of more infections or less infections. I mean, everything is up in the air with regards to that, and no one really knows. So that's going to play out by itself, and you can make any assumptions, any speculations, but I don't think anybody really knows. The market reacted obviously on the emotional impact of the selling that took place, but it's coming into the hands of a major level of support and buyers that are looking to buy this market at this level. And I am one of them that essentially is looking for potentially the annual low of this year. For silver, for gold, for Bitcoin. The chart here in silver is showing us that there is some buying interest, obviously, and we have this little bit of a wedge pattern that is building. And either way, if we break above this 2246, 2250, it's a break up above the wedge. If we break below or close below this 22 what looks to be around 2230, and obviously it's the lower level of support. So in essence, you can incorporate all the other technical, analytical metrics, and you're going to validate basically what the VCPMI already has prospectively identified. And it's just a question of the price action confirming that. The variable changing price momentum indicator is a momentum indicator. It doesn't look basically or uses price as a defining factor as much as using the standard deviation to identify the high probability entry points where the momentum unfolds. And it prepares you for basically those targets when the momentum unfolds. So you're prepared if you do get that momentum where the target potentially offers the high probability mathematically that the market is going to revert. And if we look at Bitcoin, and we go back basically to this high that we saw here of 59,910 that was made on November 25th. You see that the market traded at the extreme above the mean, or what the AI identifies as distribution of supply, and it tells you here is a very high probability that we're going to begin to see supply selling come into the market. When it closed below these levels, which are pretty much confirming this distribution of supply, the market activated a bearish short trigger. Now, this is a short-term signal within a bigger pattern, which is a very bullish market that already has seen this year phenomenal results in Bitcoin. And you can measure that big trend within that trend by looking at the short-term cycles, by looking at the standard deviation levels here on a short-term basis, which is what we're doing. And you can see here that when the market activated the signals here, the pattern already activated the levels below in blue. And when the daily adjusts to the weekly prices, as you can see here, this is what's called high-level harmonics, where basically if the market reverts from here, it confirms daily and weekly signals, which is a high probability signal. And the reversion unfolds, the target is completed, and the market goes into a consolidation. So we go neutral at that point and let the market do its choppiness. As you can see up here as well, it goes into a consolidation after it meets the targets. Same thing over here, it goes into a consolidation after the target is completed, and then it reverts. The momentum will validate it when the reversion occurs, and then automatically the targets are in place. Now the weekly target is 60,500 for the week. For the day, it has completed that 57,825. And now we've been trading around the average price, which I say it's going to get choppy. But it did go up to that 59,000 level and activated a short trigger once again. The target was completed daily, and we came down to this buy one level now of 56,105, which activated a buy trigger. The target was completed. It went up into a bullish momentum again, and now you can see that 59,000 seems to be a level of resistance. The ceiling of this pattern is about 59,000. And the average price that we're looking at is about 57,825. So we've been trading between the extreme above the mean or the extreme below the mean. As you can see here, it's been below the mean. The buy signal is activated. It goes right up to the extreme above the mean. And this is what's called mean reversion trading, irregardless of what the fundamentals are. Time after time, you see this reversion unfolding, coming back down, reverting, activating from those buy levels, reverting back up again to the mean, and this is pretty much where we are on this signal that was activated at 7:30 p.m. on the 1st of December. And so the targets are above when the signal is activated, and only the market will confirm that. The VCPMI tells us when the signal is activated, and that's pretty much what I teach in terms of how you apply and identify entry points, targets, protective levels, using the variable changing price momentum indicator. This is not a perfect science, but I'm sharing with you what I use for my own trading. And it's not perfect. It's not guaranteed. So you do have to manage your risk and basically according to your profile. But again, this is like a GPS that you can use to give you the high probability areas where you can take advantage of the market using the reversion to the mean principle. We have a kind of a mixed day here today, and we have some positive, some greens on digital assets here. The GDLC, GBTC, Bitcoin is obviously, as I said, in a bullish mode, so it's bullish for the derivatives underneath the market. One of the comments that I want to make here, particularly in gold mining shares, is that the gold mining shares are tremendously undervalued, oversold. It's a fire sale going on, and I strongly recommend to take a look at and continue to add to your position if you are in the metal sector, basically, to take a look at gold mining shares, which are tremendously undervalued. The gold market, the silver markets are tremendously undervalued relative to all the other assets. Thank you, everybody, once again. Have a great trading day here, and I'll talk to you next time. Take care.